Let's get ready for the Georgia Real Estate Exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Georgia Real Estate Law and Practice. Georgia Real Estate Commission, the GREC. What is the primary function of the Georgia Real Estate Commission? Is it A, to mediate disputes between agents and clients? B, to regulate and oversee real estate practices in Georgia? C, to set property tax rates in Georgia? Or D, to provide loans to prospective homebuyers? The answer is B, to regulate and oversee real estate practices in Georgia. The Georgia Real Estate Commission's primary function is to regulate and oversee real estate practices within the state to ensure adherence to legal and ethical standards. What authority does GREC have over unlicensed real estate activity in Georgia? Is it A, none, as it only regulates licensed activities? B, it can impose fines and penalties? C, it can revoke licenses of unlicensed individuals? Or D, it can only issue warnings? The answer is B, it can impose fines and penalties. GREC has the authority to impose fines and penalties on individuals engaged in unlicensed real estate activity to maintain legal and ethical standards in the industry.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which of the following best describes the primary role of the Georgia Real Estate Commission regarding license issuance? Is it A, collecting fees for real estate transactions? B, issuing and renewing licenses for real estate professionals? C, arbitrating disputes between real estate agents and clients? Or D, providing financial assistance for real estate education? The answer is B, issuing and renewing licenses for real estate professionals. GREC's primary role regarding licenses includes issuing and renewing them to ensure compliance with Georgia real estate laws and maintain professional standards. This ensures that all practicing agents meet the necessary qualifications and ethical standards. Which of the following is a requirement for becoming a GREC commissioner? Is it A, must be a resident of Georgia for at least 10 years? B, must have been actively engaged in real estate for at least 5 years? C, must be over the age of 60? Or D, must not have any affiliation with real estate? The answer is B, must have been actively engaged in real estate for at least 5 years. To qualify as a GREC commissioner, one must have been actively engaged in the real estate business in Georgia for at least 5 years to ensure relevant industry experience. What action can GREC take if a licensed real estate agent violates Georgia real estate law? Is it A, impose changes to local zoning laws? B, suspend or revoke the agent's license? C, fine the agent up to $50,000? Or D, require the agent to provide free services? The answer is B, suspend or revoke the agent's license. GREC can suspend or revoke the license of an agent or broker who violates Georgia real estate law to uphold legal and ethical standards within the state's real estate industry. Georgia real estate licensing laws and regulations. Which of the following is a requirement for obtaining a real estate license in Georgia? Is it A, being at least 18 years old? B, completing 75 hours of pre-licensing education? C, having a high school diploma or GED? Or D, passing a federal background check? The answer is B, completing 75 hours of pre-licensing education. To obtain a real estate license in Georgia, applicants must complete 75 hours of pre-licensing education. This education ensures that prospective licensees are adequately prepared for the responsibilities of the role. What is the minimum age requirement to become a licensed broker in Georgia? Is it A, 18 years old, B, 19 years old, C, 21 years old, or D, 25 years old? The answer is C, 21 years old. In Georgia, an individual must be at least 21 years old to qualify for a broker's license. This ensures that brokers have an adequate level of maturity and experience. How often must a Georgia real estate license be renewed? Is it A, every year, B, every 2 years, C, every 3 years, or D, every 4 years? The answer is D, every 4 years. In Georgia, real estate licenses need to be renewed every 4 years. License holders must complete continuing education requirements to maintain active licensure. What continuing education requirement must be met for each renewal period in Georgia? Is it A, 15 hours of continuing education, B, 21 hours of continuing education, C, 24 hours of continuing education, or D, 30 hours of continuing education? The answer is C, 24 hours of continuing education. Georgia requires real estate licensees to complete 24 hours of continuing education for each 4-year renewal period. This helps ensure that professionals stay informed about industry changes and legal updates. Which entity oversees and regulates real estate licensing in Georgia? Is it A, Georgia Department of Real Estate, B, Georgia Real Estate Commission, C, Georgia Real Estate Board, or D, Georgia Department of Commerce? The answer is B, Georgia Real Estate Commission. The Georgia Real Estate Commission is responsible for overseeing and regulating real estate licensing and practice in Georgia, ensuring that licensees comply with state laws and ethical standards. What is the required pre-license education for a real estate salesperson in Georgia? Is it A, 50 hours of approved coursework, B, 75 hours of approved coursework, C, 90 hours of approved coursework, or D, 120 hours of approved coursework? The answer is B, 75 hours of approved coursework. Georgia requires individuals to complete 75 hours of approved pre-license education before they can sit for the real estate salesperson exam. Fair housing laws in Georgia. Which Georgia state authority is primarily responsible for enforcing fair housing laws? Is it A, Georgia Department of Revenue, B, Georgia Real Estate Commission, C, Georgia Department of Transportation, or D, Georgia Secretary of State? The answer is B, Georgia Real Estate Commission. The Georgia Real Estate Commission enforces fair housing laws in the state, ensuring compliance with both state and federal regulations. Which of the following attributes is protected under Georgia's fair housing laws? Is it A, income level, B, educational background, C, race, or D, job title? The answer is C, race. Under Georgia's fair housing laws, attributes such as race, color, religion, sex, national origin, familial status, and disability are protected. A landlord in Georgia refuses to rent a property to a family with young children. This action is likely a violation of which protected category? Is it A, national origin, B, religion, C, familial status, or D, income level? The answer is C, familial status. Refusing to rent to families with children under 18 is a violation of the familial status protection under both state and federal fair housing laws. Under Georgia fair housing laws, which of the following practices is prohibited in housing-related activities? Is it A, requiring a credit check, B, refusing service animals for tenants with disabilities. C. Charging a deposit. Or D. Conducting background checks. The answer is B. Refusing service animals for tenants with disabilities. Under Georgia fair housing laws, landlords must accommodate service animals for tenants with disabilities, as this is considered a reasonable accommodation. What federal act works alongside Georgia fair housing laws to protect against housing discrimination? Is it A. Fair Labor Standards Act, B. Fair Housing Act, C. Equal Employment Opportunity Act, or D. Civil Rights Act of 1957? The answer is B. Fair Housing Act. The Fair Housing Act is a key federal law that, along with Georgia's state laws, ensures protection against housing discrimination based on race, color, religion, sex, familial status, and other attributes. What is the primary purpose of the Georgia Fair Housing Act? Is it A. To regulate rental prices throughout Georgia, B. To eliminate discrimination in housing based on specific protected characteristics, C. To manage zoning laws and regulations, or D. To provide tax incentives for rental property owners? The answer is B. To eliminate discrimination in housing based on specific protected characteristics. The Georgia Fair Housing Act aims to eliminate discrimination in housing transactions based on race, color, religion, sex, disability, familial status, or national origin, ensuring equal housing opportunities for all. Which of the following actions would most likely be considered a violation of the Georgia Fair Housing Act? Is it A. Refusing to rent to someone because they own a pet, B. Charging a higher security deposit to families with children, C. Declining to rent to someone due to insufficient income, or D. Requesting an employment reference from a prospective tenant? The answer is B. Charging a higher security deposit to families with children. Under the Georgia Fair Housing Act, it is illegal to treat individuals differently in housing transactions based on protected characteristics, including familial status, making it unlawful to charge higher deposits to families with children. Real estate contracts in Georgia. In Georgia, which type of signature is typically required for a real estate sales contract to be legally binding? Is it A. Digital signature, B. Witnessed hand signature, C. Notarized hand signature, or D. Handwritten signature? The answer is D. Handwritten signature. In Georgia, a real estate sales contract is typically legally binding with a handwritten signature from both parties. Digital signatures may also be acceptable under certain circumstances. What is the required earnest money deposit condition in Georgia real estate contracts? Is it A. It must be 10% of the purchase price, B. It is negotiable between the buyer and seller, C. It must be held in the seller's bank account, or D. It must be non-refundable under all circumstances? The answer is B. It is negotiable between the buyer and seller. In Georgia, the earnest money deposit amount is negotiable between the buyer and the seller, and it is usually held in a broker's trust account or an escrow account. Which of the following is not a necessary element for a valid real estate contract in Georgia? Is it A. A written agreement, B. Consideration, C. A valid property description, or D. Inspection clause? The answer is D. Inspection clause. While a written agreement, consideration, and a valid property description are required for a valid real estate contract in Georgia, an inspection clause is optional. How long does a buyer have to cancel a real estate contract based on the Georgia Property Disclosure Statement? Is it A. 3 days, B. Until closing, C. Right after the receipt of the disclosure, or D. A week after receipt of the disclosure? The answer is C. Right after the receipt of the disclosure. In Georgia, buyers typically have a specified period, often 3 days, to cancel the contract after receiving the property disclosure statement, depending on the agreement terms. Which of the following statements regarding amendments to Georgia real estate contracts is most accurate? Is it A, amendments must be verbally agreed upon? B, amendments must be written and signed by both parties? C, amendments can only address property price adjustments? Or D, amendments are optional and not legally required? The answer is B, amendments must be written and signed by both parties. Amendments to Georgia real estate contracts must be in writing and signed by all parties, ensuring that changes to the original terms are formally and legally recognized. What is the statute of limitations for bringing a legal action based on a written real estate contract in Georgia? Is it A, 2 years, B, 4 years, C, 6 years, or D, 7 years? The answer is C, 6 years. According to Georgia law, the statute of limitations for bringing a legal action based on a written real estate contract is 6 years.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Disclosures required by Georgia law. Which of the following disclosures is mandatory for a seller in Georgia when selling a single-family residential property? Is it A, presence of radon gas, B, number of previous owners, C, square footage of the home, or D, neighborhood crime rates? The answer is A, presence of radon gas. Sellers must disclose any known presence of hazardous materials, including radon gas. This requirement helps ensure buyers are fully informed about the property's condition. In Georgia, a seller must disclose all the following except: is it A, existence of lead-based paint, B, past roof repairs, C, stigmatized property status, or D, presence of asbestos? The answer is C, stigmatized property status. Under Georgia law, sellers are not required to disclose if a property is stigmatized, such as being the site of a crime or death. Material defects, however, must be disclosed. Which form is used to inform buyers about lead-based paint hazards in Georgia real estate transactions involving properties built before 1978? Is it A, seller's property disclosure statement, B, lead-based paint disclosure form, C, environmental hazard report, or D, residential property condition disclosure? The answer is B, lead-based paint disclosure form. The lead-based paint disclosure form must be completed for properties built before 1978 to inform buyers about potential lead-based paint hazards, as required by federal law. When is a Georgia seller required to provide the Georgia seller's property disclosure statement? Is it A, always, regardless of the property type, B, only for commercial properties, C, only for residential properties, or D, only if the buyer requests it? The answer is C, only for residential properties. The Georgia seller's property disclosure statement is used primarily in residential transactions to disclose material defects and other conditions of the property. What must a Georgia real estate agent disclose to all parties in a transaction? Is it A, the agent's commission rate, B, any material relationship with the property, C, the buyer's mortgage interest rate, or D, neighborhood zoning regulations? The answer is B, any material relationship with the property. Agents in Georgia are required to disclose any material relationship with the property to maintain transparency and avoid conflicts of interest, ensuring a fair transaction for all parties involved. What is required to be disclosed by a seller if the property has a history of flooding in Georgia? Is it A, nothing, it's not necessary to disclose past flooding events, B, only if flooding caused significant damage, C. A history of flooding must always be disclosed. Or D. Only if requested by the buyer directly. The answer is C. A history of flooding must always be disclosed. Sellers must disclose any known history of flooding, as it is considered a material fact impacting the property's value per Georgia real estate law. Transfer of title in Georgia. What is the primary document used to transfer ownership of real property in Georgia? Is it A. Deed, B. Mortgage, C. Lease, or D. Title insurance? The answer is A. Deed. In Georgia, a deed is the legal document required to transfer property ownership from one party to another. It must be properly executed and recorded to be effective. Which type of deed offers the least protection to the grantee in Georgia? Is it A. Quitclaim deed, B. General warranty deed, C. Special warranty deed, or D. Bargain and sale deed? The answer is A. Quitclaim deed. A quitclaim deed in Georgia transfers whatever interest the grantor has in the property without any warranties or guarantees, offering the least protection to the grantee. In Georgia, when does title to real property typically transfer from the seller to the buyer? Is it A. Upon signing the deed, B. Upon notarization of the deed, C. Upon delivery and acceptance of the deed, or D. Upon recording the deed? The answer is C. Upon delivery and acceptance of the deed. Title to real property in Georgia typically transfers upon the delivery and acceptance of the deed, which must be a mutual act by both the grantor and the grantee. What legal concept in Georgia ensures that a deed is properly constructed to transfer all of the grantor's rights and title? Is it A. Novation, B. Legal description, C. Habendum clause, or D. Covenant of seisin? The answer is C. Habendum clause. The habendum clause in a deed indicates the extent of ownership being conveyed to the grantee, ensuring that all of the grantor's rights and title are transferred. In Georgia, which entity must deeds be recorded with to notify the public of a property ownership change? Is it A. Georgia Real Estate Commission, B. County Clerk's Office, C. Secretary of State, or D. Georgia Department of Revenue? The answer is B. County Clerk's Office. In Georgia, property deeds must be recorded with the County Clerk's Office. This action gives public notice of the ownership change and is crucial for the protection of property rights. What is the purpose of a warranty deed in the transfer of real property in Georgia? Is it A. To transfer personal property rights, B. To provide a legal description of the property, C. To guarantee that the title is free of defects and encumbrances, or D. To record the sale price of the property? The answer is C. To guarantee that the title is free of defects and encumbrances. A warranty deed in Georgia guarantees that the title is free of defects and that the grantor has the legal right to sell the property. It offers the highest level of protection to the buyer. Which document is primarily used to prove a transfer of property ownership in Georgia? Is it A. Lease agreement, B. Deed, C. Title insurance policy, or D. Affidavit of ownership? The answer is B. Deed. In Georgia, a deed is the primary legal document used to transfer ownership of real property. It must be properly executed and recorded to be effective. Earnest money and escrow in Georgia. Who is responsible for holding earnest money in a real estate transaction in Georgia? Is it A. The buyer's broker, B. the seller's broker, C. the closing attorney, or D. the broker named in the purchase agreement? The answer is D. The broker named in the purchase agreement. In Georgia, earnest money must be deposited in a trust or escrow account held by the broker named in the purchase agreement ensuring compliance with state regulations. What is the time frame within which earnest money must be deposited into an escrow account in Georgia? Is it A, 1 business day after receipt, B, 3 business days after receipt, C, 5 business days after receipt, or D, 7 business days after receipt? The answer is C, 5 business days after receipt. According to Georgia law, brokers must deposit earnest money into an escrow account within 5 business days of receipt to comply with trust fund handling regulations. What must be done if a dispute arises over the disbursement of earnest money in Georgia? Is it A, the broker decides the disbursement based on the situation, B, the parties must go to court for resolution, C, the earnest money is automatically forfeited to the seller, or D, the earnest money is split equally between the broker and the seller? The answer is B, the parties must go to court for resolution. If there is a dispute over earnest money in Georgia, the parties may be required to resolve the issue through the court system. Brokers must hold the funds until the dispute is legally resolved. What must a broker do if they are unable to resolve an earnest money dispute in Georgia? Is it A, return the earnest money to the buyer, B, file a court interpleader action, C, disperse the money equally to both parties, or D, use the money to cover transaction expenses? The answer is B, file a court interpleader action. In Georgia, if a broker is unable to resolve an earnest money dispute, they should file a court interpleader action to allow the court to determine the rightful distribution of the funds. When can a broker release earnest money to parties according to Georgia law? Is it A, when both parties agree in writing, B, when the broker decides it is appropriate, C, after closing of the transaction only, or D, when the buyer demands the money back? The answer is A, when both parties agree in writing. Under Georgia law, a broker can release earnest money when both parties agree in writing on the disbursement. This agreement ensures that all parties consent to the distribution of funds. How is earnest money typically handled in a Georgia real estate transaction? Is it A, it is given directly to the seller upon offer acceptance, B, it is placed in an escrow account managed by the buyer, C, it is placed in an escrow account managed by the broker or attorney, or D, it is retained by the real estate agent representing the buyer? The answer is C, it is placed in an escrow account managed by the broker or attorney. In Georgia, earnest money is typically handled by placing it in an escrow account managed by the broker or attorney. This ensures that the funds are securely held while the transaction progresses. What must be included in the escrow agreement regarding earnest money in Georgia? Is it A, the buyer's financial history, B, instructions for handling disputes, C, the seller's personal information, or D, the real estate agent's commission details? The answer is B, instructions for handling disputes. The escrow agreement in Georgia must include instructions for handling disputes over the earnest money to ensure clarity and legal compliance in case any disagreements arise. Georgia real estate taxes. Which entity is responsible for determining property tax rates in Georgia? Is it A, the Georgia General Assembly, B, County Boards of Tax Assessors, C, County Boards of Commissioners, or D, the Georgia Department of Revenue? The answer is C, County Boards of Commissioners. In Georgia, the County Boards of Commissioners are responsible for setting property tax rates. They determine these rates based on budgetary requirements and financial needs for public services. What is the purpose of a homestead exemption in Georgia real estate property taxes? Is it A, to fund public schools, B, to lower property taxes for eligible homeowners, C. To increase property values. Or D. To subsidize real estate agents. The answer is B. To lower property taxes for eligible homeowners. The homestead exemption in Georgia provides eligible homeowners with a reduction in the assessed value of their property, resulting in lower property taxes to ease the financial burden. How frequently are properties reassessed for tax purposes in Georgia? Is it A. Every 5 years, B. Every 7 years, C. Annually, or D. Biannually? The answer is C. Annually. In Georgia, properties are reassessed annually. This allows county tax assessors to ensure property tax valuations are up to date and reflect current real estate market conditions. Who has the right to appeal a property tax assessment in Georgia? Is it A. Only the homeowner, B. Only the county tax office, C. Any property owner or their legal representative, or D. Real estate agents? The answer is C. Any property owner or their legal representative. In Georgia, any property owner or their legal representative has the right to appeal their property tax assessment if they believe the assessed value is incorrect or unfair. What is the penalty for delinquent property tax payments in Georgia? Is it A. A fine of up to $500, B. Foreclosure on the property, C. Suspension of driver's license, or D. Increased mortgage interest rates? The answer is B. Foreclosure on the property. In Georgia, failure to pay property taxes can ultimately result in the county foreclosing on the property. Additional penalties may include interest and fees that accrue until the debt is paid. Who is responsible for assessing the fair market value of properties for tax purposes in Georgia? Is it A. State government, B. County tax assessor, C. Real estate brokers, or D. Federal government? The answer is B. County tax assessor. In Georgia, the county tax assessor's office is responsible for assessing the fair market value of properties for tax purposes, ensuring properties are taxed accurately based on current market values. What is a millage rate in the context of Georgia real estate taxes? Is it A. The rate at which properties are sold in a particular area, B. The tax rate used to calculate local property taxes, C. The rate of interest on real estate loans, or D. The percentage increase in property value over a year? The answer is B. The tax rate used to calculate local property taxes. The millage rate is the tax rate used in calculating local property taxes in Georgia. It represents the amount per $1,000 of assessed value to determine the property's tax liability. Georgia real estate finance. Loan fundamentals. What is a primary distinguishing feature of a fixed-rate mortgage? Is it A. The interest rate remains the same throughout the term, B. The interest rate adjusts periodically based on market conditions, C. The loan can be paid off early without any penalties, or D. Payments decrease over time as the balance decreases? The answer is A. The interest rate remains the same throughout the term. In a fixed-rate mortgage, the interest rate is locked in at the time of the loan agreement and remains constant throughout the loan term, providing predictable payments for the borrower. What is the primary role of the secondary mortgage market? Is it A. To provide consumers with loan options directly, B. To buy and sell existing mortgages from primary lenders, C. To regulate mortgage interest rates, or D. To offer down payment assistance programs? The answer is B. To buy and sell existing mortgages from primary lenders. The secondary mortgage market plays a crucial role in providing liquidity to primary lenders by buying and selling existing mortgage loans, thereby allowing lenders to issue more loans. Which entity is most often involved in insuring FHA loans? Is it A. Federal Housing Administration FHA, B. Department of Veterans Affairs, VA. C. Freddie Mac. Or D. Fannie Mae. The answer is A. Federal Housing Administration, FHA. The Federal Housing Administration insures loans made by FHA-approved lenders, making it easier for borrowers to qualify for a mortgage. What distinguishes a promissory note from a mortgage? Is it A. A promissory note provides a personal promise to repay the loan. B. A mortgage secures the loan by using real estate as collateral. C. A promissory note always includes the interest rate of the loan. Or D. A mortgage can be transferred, but a promissory note cannot. The answer is A. A promissory note provides a personal promise to repay the loan. A promissory note is a written, signed promise to pay a specified amount of money to a particular entity by a fixed date or on demand, distinguishing it from a mortgage which secures the payment against real property. Which term refers to a loan where the borrower makes payments on both interest and principal periodically until the balance is paid off? Is it A. Amortized loan, B. Balloon payment loan, C. Interest-only loan, or D. Open-end loan? The answer is A. Amortized loan. An amortized loan requires periodic payments that include both principal and interest, ensuring that the loan is paid off by the end of its term. What is the primary function of the secondary mortgage market? Is it A. To originate loans to homebuyers, B. To manage investor funds, C. To provide liquidity to primary lenders by purchasing loans, or D. To insure loans for financial institutions? The answer is C. To provide liquidity to primary lenders by purchasing loans. The secondary mortgage market's primary function is to purchase mortgages from primary lenders, providing them with liquidity. This allows lenders to reinvest their funds in new loans. Which term refers to a fixed interest rate loan with equal periodic payments over a set term? Is it A. Adjustable rate mortgage, B. Balloon mortgage, C. Amortized loan, or D. Interest-only loan? The answer is C. Amortized loan. An amortized loan involves periodic payments that cover both interest and principal, ensuring the loan is paid off by the end of the term.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Loan types. What is a primary feature of a conventional loan? Is it A. It is guaranteed by the federal government, B. It typically requires a higher down payment compared to FHA loans, C. It requires payment of a mortgage insurance premium, MIP, or D. It has no maximum loan amount? The answer is B. It typically requires a higher down payment compared to FHA loans. Conventional loans typically require higher down payments compared to FHA loans and are not guaranteed by the federal government. They are often chosen by borrowers with strong credit and financial stability. Which of the following is true about FHA loans? Is it A. They require a minimum down payment of 10%, B. They are only available to first-time homebuyers, C. They require the borrower to pay mortgage insurance premiums, or D. They are guaranteed by Fannie Mae and Freddie Mac? The answer is C. They require the borrower to pay mortgage insurance premiums, MIP. FHA loans are insured by the Federal Housing Administration and require borrowers to pay mortgage insurance premiums, MIP. These loans are popular due to their lower down payment requirements and flexible credit qualifications. What distinguishes a VA loan from other loan types? Is it A. It requires a down payment of at least 5%, B. It is available to all homebuyers, C. It is guaranteed by the Department of Veterans Affairs, or D. It requires the payment of monthly mortgage insurance premiums, The answer is C. It is guaranteed by the Department of Veterans Affairs. VA loans are guaranteed by the Department of Veterans Affairs and are available to eligible veterans, active duty service members, and some military spouses. They often require no down payment or mortgage insurance. Which type of loan typically has the most stringent credit requirements? Is it A, conventional loans, B, loans, C, Department of Veterans Affairs or VA loan, or D, U.S. Department of Agriculture or USDA loans? The answer is A, conventional loans. Conventional loans typically have the most stringent credit requirements. Borrowers often need higher credit scores and larger down payments compared to FHA, VA, or USDA loans. What is a significant benefit of an FHA loan for borrowers with lower credit scores? Is it A, it does not require mortgage insurance, B, it requires a higher down payment, C, it has more flexible credit qualifications, or D, it is only available for new home purchases? The answer is C. It has more flexible credit qualifications. FHA loans are beneficial for borrowers with lower credit scores because they have more flexible credit qualifications. These loans help make homeownership more accessible to a wider range of borrowers. How does the down payment requirement for a VA loan typically compare to that of other loans? Is it A, VA loans usually require no down payment, B, VA loans usually require a higher down payment than conventional loans, C, VA loans require a minimum 20% down payment, or D, VA loans and conventional loans have the same down payment requirements? The answer is A, VA loans usually require no down payment. VA loans, backed by the U.S. Department of Veterans Affairs, often do not require a down payment, making them attractive to eligible veterans. What is a key feature of Federal Housing Administration FHA loans? Is it A, they are only available for first-time homebuyers, B, they offer lower interest rates compared to conventional loans, C, they require a lower minimum credit score than most conventional loans, or D, they do not require mortgage insurance premiums? The answer is C, they require a lower minimum credit score than most conventional loans. FHA loans are popular because they typically have lower credit score requirements, making home loans accessible to a wider range of borrowers. Loan qualifications. What is the primary purpose of a credit report in the loan qualification process? Is it A, to determine the property's value, B, to evaluate the borrower's creditworthiness, C, to appraise the condition of the property, or D, to set the interest rate for the loan? The answer is B, to evaluate the borrower's creditworthiness. A credit report is used to evaluate a borrower's creditworthiness, showing their credit history, current debts, and repayment behavior. This is critical in determining loan approval. What role does the debt-to-income DTI ratio play in loan qualification? Is it A, it determines the interest rate, B, it is used to evaluate the loan term, C, it assesses the borrower's ability to repay the loan, or D, it values the property for the loan amount? The answer is C, it assesses the borrower's ability to repay the loan. The debt-to-income DI ratio indicates a borrower's ability to repay a loan by comparing monthly debt payments to gross monthly income. Lenders use this to assess risk and determine loan eligibility. Why is employment history important in loan qualification? Is it A, it helps determine the property's location, B, it shows the stability of the borrower's income, C, it identifies potential co-borrowers, or D, it sets the price of the mortgage insurance? The answer is B, it shows the stability of the borrower's income. Employment history is crucial as it indicates the stability and reliability of the borrower's income source, which lenders consider when assessing the ability to repay the loan. What does the loan-to-value ratio represent? Is it A, the comparison between the loan amount and the borrower's income? B, the proportion of the loan amount to the property's appraised value? C, the borrower's creditworthiness? Or D, the potential profit from the property? The answer is B, the proportion of the loan amount to the property's appraised value. The loan-to-value ratio indicates the proportion of the loan amount compared to the property's appraised value, impacting mortgage terms and insurance requirements. How does the loan purpose affect loan qualification? Is it A, it determines the borrower's employment stability? B, it influences the loan terms and conditions? C, it sets the property's appraisal value? Or D, it identifies the need for private mortgage insurance? The answer is B, it influences the loan terms and conditions. The loan purpose, such as purchase, refinance, or construction, can affect loan terms, interest rates, and repayment conditions, significantly influencing the qualification process and loan feasibility. What document is often required by lenders to confirm an applicant's income and employment history? Is it A, credit report? B, verification of employment VUE? C, loan application? Or D, appraisal report? The answer is B, verification of employment VUE. Verification of employment VUE is required by lenders to ensure the applicant has a stable income source. This document confirms the employment history and salary details provided by the applicant. Why do lenders review an applicant's credit score during the loan qualification process? Is it A, to determine the property's value? B, to assess the applicant's creditworthiness? C, to verify employment history? Or D, to establish the interest rate for the loan? The answer is B, to assess the applicant's creditworthiness. Credit scores are critical in assessing creditworthiness because they summarize the applicant's past credit behavior, indicating the likelihood of timely loan repayment. Lenders rely on this to mitigate risk. The loan application process. What is the primary purpose of collecting borrowers' detailed financial information during the loan application process? Is it A, to determine the borrower's eligibility for a loan? B, to provide data for real estate market analysis? C, to assist in property appraisal? Or D, to ensure fair housing compliance? The answer is A, to determine the borrower's eligibility for a loan. The main objective of gathering detailed financial information is to evaluate the borrower's financial stability and repayment capacity, which helps the lender decide on loan approval. Which document typically outlines the terms and conditions of the loan during the application process? Is it A, purchase agreement? B, promissory note? C, title insurance? Or D, deed of trust? The answer is B, promissory note. The promissory note is a critical document in the loan application process that specifies the amount borrowed, interest rate, repayment schedule, and other key terms of the loan. In Georgia, what is the significance of the good faith estimate, GFE, in the loan application process? Is it A, it guarantees the loan approval? B, it outlines the terms of the real estate transaction? C, it provides an estimate of the closing costs and loan terms? Or D, it evaluates the borrower's creditworthiness? The answer is C, it provides an estimate of the closing costs and loan terms. The good faith estimate is a document provided by the lender detailing the estimated closing costs and loan terms, helping borrowers understand the financial commitment involved in the loan. What information does a lender typically seek from a borrower's employment history during the loan application? Is it A, employer's market position? B, borrower's job stability and income level? C, employment benefits packages? Or D, likelihood of promotion? The answer is B, borrower's job stability and income level. Lenders look at a borrower's job stability and income level to evaluate their reliability and capacity to consistently meet loan repayment obligations. Why is the debt-to-income DTI ratio important to lenders during the loan application process? Is it A, it measures the borrower's credit score? B, it determines the market value of the property? C, it helps assess the borrower's ability to manage monthly payments? Or D, it guarantees the lowest interest rates available? The answer is C. It helps assess the borrower's ability to manage monthly payments. The debt-to-income ratio is vital as it shows the percentage of the borrower's income that goes towards debt repayment, helping assess whether the borrower can handle additional loan payments. During the loan application process, why is it important for borrowers to provide detailed asset information? Is it A, to determine the borrower's wealth? B, to evaluate the borrower's ability to repay the loan? C, to verify the borrower's employment status? Or D, to comply with fair housing regulations? The answer is B, to evaluate the borrower's ability to repay the loan. Lenders assess a borrower's assets to ensure the borrower has sufficient resources to meet the loan repayment obligations. This assessment includes checking bank accounts, investments, and other valuable assets. What is the role of the loan estimate in the loan application process? Is it A, to provide detailed property descriptions? B, to disclose the estimated loan costs and terms? C, to outline the borrower's employment history? Or D, to verify the borrower's income? The answer is B, to disclose the estimated loan costs and terms. The loan estimate discloses important details about the loan, such as the interest rate, monthly payment, and total closing costs. It helps borrowers compare loan offers from different lenders.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Underwriting for Georgia real estate. What is the primary objective of the underwriting process in real estate finance? Is it A, to approve loans based on client relationships? B, to ensure real estate transactions comply with state laws? C, to evaluate the risk of a loan for the lender? Or D, to advertise new loan products to potential buyers? The answer is C, to evaluate the risk of a loan for the lender. Underwriting in real estate finance centers on evaluating the financial risk associated with a loan application, assessing the borrower's creditworthiness and ability to repay the loan. It ensures that lenders make informed lending decisions. Which factor is commonly assessed during the underwriting process for a real estate loan in Georgia? Is it A, the borrower's credit score? B, the aesthetic appeal of the property? C, the proximity of the property to schools? Or D, the borrower's personal hobbies? The answer is A, the borrower's credit score. A borrower's credit score is crucial in underwriting as it reflects their credit history and ability to repay loans. Lenders use it to evaluate creditworthiness and predict the likelihood of loan default. How does the debt-to-income DTI ratio impact the underwriting decision in Georgia real estate finance? Is it A, it determines the aesthetic value of the property? B, it helps lenders assess the borrower's ability to manage monthly payments? C, it indicates the neighborhood's market value? Or D, it measures the amount of equity the borrower has in the property? The answer is B. It helps lenders assess the borrower's ability to manage monthly payments. The debt-to-income DTI ratio is crucial in underwriting as it compares the borrower's total recurring monthly debt to their gross monthly income, helping lenders evaluate if the borrower can handle additional monthly payments. Which document is essential for verifying a borrower's income during the underwriting process? Is it A, the borrower's employment contract. B, the borrower's recent pay stubs. C, the property's title deed. Or D, the borrower's social media profiles. The answer is B, the borrower's recent pay stubs. Recent pay stubs are crucial for the underwriting process as they provide verified evidence of a borrower's income, helping lenders accurately assess the financial stability and repayment capacity of the applicant. What role does the appraisal of the property play in the underwriting process? Is it A, it verifies the legal ownership of the property? B, it determines the market value of the property? C, it examines the buyer's personal credit history? Or D, it evaluates the interest rate offered to the borrower? The answer is B, it determines the market value of the property. An appraisal determines the market value of the property. This ensures that the loan amount is justified and the lender is not extending credit based on an overvalued asset, reducing financial risk. What does an underwriter typically evaluate to determine a borrower's likelihood of making timely mortgage payments? Is it A, credit score, B, number of dependents, C, age, or D, geographic location? The answer is A, credit score. Underwriters closely evaluate the credit score to determine a borrower's payment history and financial responsibility. This score reflects their overall creditworthiness and reliability in repaying loans. Which type of underwriting approach involves a detailed manual assessment of the borrower's financial situation? Is it A, automated underwriting, B, manual underwriting, C, pre-approval underwriting, or D, conditional underwriting? The answer is B, manual underwriting. Manual underwriting requires an extensive review of a borrower's financial information, requiring more time but providing a thorough understanding of the borrower's risk profile. Loan closing. What is the primary document used to convey ownership of real property at a loan closing in Georgia? Is it A, promissory note, B, deed of trust, C, warranty deed, or D, title insurance policy? The answer is C, warranty deed. In Georgia, a warranty deed is the primary document used to convey ownership of real property at a loan closing. It guarantees that the grantor holds clear title to the property. Which party typically pays for title insurance in a Georgia real estate transaction? Is it A, buyer, B, seller, C, lender, or D, title company? The answer is A, buyer. In Georgia, customary practice dictates that the buyer pays for the title insurance policy, which ensures the property title is valid and free from any liens or disputes. What purpose does the HUD-1 settlement statement serve in a Georgia real estate transaction? Is it A, to disclose the loan's annual percentage rate, B, to itemize all charges imposed on the borrower and seller, C, to verify the loan applicant's employment history, or D, to detail the home's appraised value? The answer is B, to itemize all charges imposed on the borrower and seller. The HUD-1 settlement statement itemizes all charges to the borrower and seller in real estate transactions. It ensures transparency and compliance with RESPA, Real Estate Settlement Procedures Act. Which document is signed by the borrower at closing and outlines the terms of the mortgage loan? Is it A, deed, B, loan estimate, C, promissory note, or D, closing disclosure? The answer is C, promissory note. The promissory note is signed by the borrower at closing and outlines the terms and conditions of the mortgage loan, including the repayment terms and interest rate. What is the function of an escrow account in the context of a Georgia loan closing? Is it A, to secure a low interest rate for the borrower, B, to manage the payment of property taxes and insurance premiums, C. To transfer ownership of the property. Or D. To account for the down payment. The answer is B. To manage the payment of property taxes and insurance premiums. An escrow account is managed by the lender to collect and hold funds for property taxes and insurance premiums, ensuring these essential fees are paid when due, which protects the lender's interest in the property. Who conducts the closing ceremony during a real estate transaction in Georgia? Is it A, the real estate agent, B, the buyer, C, the closing attorney, or D, the seller? The answer is C, the closing attorney. In Georgia, a licensed attorney must handle the closing process. This is a legal requirement to ensure all documents are executed properly and the transaction is legally binding. What is the role of a closing disclosure in a Georgia real estate transaction? Is it A, it provides a summary of the listing agreement, B, it outlines the property's condition and any necessary repairs, C, it itemizes all charges imposed upon the buyer and seller, or D, it serves as a deed for the transfer of ownership? The answer is C, it itemizes all charges imposed upon the buyer and seller. The closing disclosure itemizes all charges for both the buyer and the seller in a real estate transaction, providing clear details on what each party will pay or receive. Georgia mortgage disclosure requirements. Which document is required to be provided to borrowers under the Georgia Residential Mortgage Act? Is it A, good faith estimate, B, privacy policy notice, C, loan estimate, or D, Georgia Residential Mortgage Disclosure Form? The answer is D, Georgia Residential Mortgage Disclosure Form. The Georgia Residential Mortgage Disclosure Form is mandated by the Georgia Residential Mortgage Act to ensure borrowers receive clear and transparent information about their loans. What is the main purpose of Georgia's mortgage disclosure requirements? Is it A, to ensure competitive interest rates, B, to protect borrowers from predatory lending practices, C, to simplify the loan application process, or D, to reduce the cost of mortgage insurance? The answer is B, to protect borrowers from predatory lending practices. Georgia's mortgage disclosure requirements aim to protect borrowers by ensuring they are fully informed about the terms and conditions of their mortgage, thus preventing predatory lending practices. Under Georgia law, when must the residential mortgage disclosure form be delivered to the borrower? Is it A, prior to closing the loan, B, at the time of loan application, C, within 3 days of disbursement, or D, after the loan has been approved? The answer is A, prior to closing the loan. The Georgia Residential Mortgage Disclosure Form must be provided to borrowers prior to the closing of the loan to ensure they have sufficient time to understand the terms and conditions. Which agency oversees the compliance with the Georgia Residential Mortgage Act? Is it A, Georgia Department of Banking and Finance, B, Federal Trade Commission FTC, C, the Consumer Financial Protection Bureau CFPB, or D, Georgia Real Estate Commission? The answer is A, Georgia Department of Banking and Finance. The Georgia Department of Banking and Finance oversees the compliance with the Georgia Residential Mortgage Act, ensuring that borrowers receive all mandated disclosures. Which of the following is not a requirement under Georgia's mortgage disclosure laws? Is it A, disclosure of loan terms, B, disclosure of prepayment penalties, C, disclosure of APR, or D, disclosure of the borrower's credit score? The answer is D, disclosure of the borrower's credit score. Under Georgia's mortgage disclosure laws, the borrower's credit score is not required to be disclosed, even though other details such as loan terms, prepayment penalties, and APR must be. Which document must be provided by a lender to a borrower under Georgia's mortgage disclosure requirements? Is it A, Truth in Lending Disclosure, B, HUD-1 Settlement Statement, C, Residential Loan Application Statement, or D, Residential Mortgage Disclosure Form? The answer is D, Residential Mortgage Disclosure Form. Georgia law mandates that lenders provide the Residential Mortgage Disclosure Form to borrowers, ensuring transparency and disclosure of loan terms. Within how many days must a lender provide the Georgia Residential Mortgage Disclosure Form after receiving an application? Is it A, 3 days, B, 7 days, C, 10 days, or D, 15 days? The answer is A, 3 days. Lenders must provide the Georgia Residential Mortgage Disclosure Form within 3 days of receiving the application, adhering to state-mandated timelines.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.